Welcome back, everyone, to the Prospero.ai stock market live streams. Sorry for the little bit of lateness to the start of the stream today. I don't know why I can't get my mic to work on my computer today, so I hope you guys can hear me all right. Hopefully, you can. If you can't, I will try to switch over to the headphone mic, so let me know in the chat. But we have to react to the Fed today. They're leaving rates unchanged. Jerome Powell was just speaking and the market was whipsawing back and forth. We saw some volatility in the Prospero net options sentiment signals, mostly lower today. Thank you, Mario, for saying all good in the chat. So let's take a live look at the QQQ and SPY net options sentiment, see how the levels are after Jerome Powell. I think he should be just about wrapping up speaking as we're starting the stream. So we have the SPY at 35 now, and I saw it as low as I think 22 at some point, and the QQQ at 13 right now, and I saw that as low as like 6. So still lower than where we've been, but a little bit higher than the lowest points of the day. We're going to talk about what we're seeing in the market, reacting to the Fed. We got some updates on the China and USA trade talks set to happen this Saturday, it looks like, with Percent and a representative from China. So, what could that mean for the markets? We're going to discuss this story that hit Google shares really hard today, where Apple commented that they believe AI will take over instead of Google search in the future, and Google reacted pretty negatively off of it. So, I'll pose that to George and see what he thinks of it, how much of a threat it is. Google stock is already one of the cheapest valued Mag 7 stocks. So, um, just is it a value trap at this point? Maybe is a good question. There was an update from OpenAI where they're no longer going to be pursuing a for-profit company now, but they haven't given any update on what they expect their structure of their company to be. So it's still up in the air as of right now. But something I didn't know is that Microsoft actually has an interest in them becoming a for-profit company, OpenAI, that is. So I'll give you the details on that when we get into that story. Then we're going to cover Disney stock, which was up 10%. Hello, George. Welcome to the stream. Today, after announcing their earnings this morning and announcing a brand new Disney theme park set to take place somewhere around the world, but you have to wait. I'll give you the details when we cover that story. Then we have some, I would say, interesting, maybe concerning stats about the amount that people are betting in friendly betting states and how it's affecting their investing habits. And last but not least, we're going to talk about two auto companies, Carvana and Uber. So Uber has just reported their earnings. Carvana is set to, with all the tariffs going on and all the unknowns. Is it going to make people look to buy from used cars, and is it going to enhance, or is it still going to affect both of those businesses? But today, let's see where the markets. It's been gyrating so much. It's I don't know. We haven't looked for a couple minutes, so let's see where it's settling in at now. Currently, the QQQ is still slightly red. SPY, Dow Jones, and Russell are all maintaining their green on the day as of right now. But George, we've seen the QQQ and SPY net option sentiment in Prospero, both pulling back today. I think QQQ was as low as 6 at one point when I saw it. So, how are you feeling reacting to the Fed and what we've seen in the market so far today?
Yeah, I mean, QQQ was low, but I mean, SPY is still at 38, right? Which tells me that, that it might be kind of more of a swing trade scenario on some tech showing weakness, with that kind of disparity, right? I feel like what we've seen pretty consistently is when people are bearish on the economy as a whole, we definitely see, we don't see SPY at those levels. We've seen QQQ lower than SPY, but that kind of disparity tells me that this is, more of a short term, swing trade on the market, kind of hidden highs. Tomorrow will be. I haven't been doing much. I mean, partially because I was at a conference all day yesterday, and these are the realities of my job sometimes. But probably left me in Palantir a little longer than I would want to. I'm kicking myself for not getting out of Palantir when it was like up like 2% because I was like, I don't think this is going to last when it was up 2% after market a few days ago. But anyway, uh, irrespective of all that, like, sometimes when I'm traveling or whatever, I'll like pull myself aside and be like, okay, I need to make changes. This is a must do. But um, I'd say with all the volatility, like, what I was looking for is, if Palantir was down pre-market, I was going to get out. But and certainly, I would say certainly if there was kind of what I would refer to as more value-based concerns. I think we would have seen another down day today. But the fact that it, kind of rebounded a bit tells me that, kind of like always, it's moving on momentum.
Now I want to get into like the stuff that's going on with Google and Apple a little bit more in detail in a moment from now, but I just want to ask you, like, could that be affecting the QQQ net option sentiment? Why it's so low today? The fact that Google moved like 10%, just quickly, because I want to get more detail later on.
Yeah, I mean, these are obviously about antitrust. Um, it's it's a pretty interesting thing. I mean, I think it's one of those things, especially when you have legal concerns that affect, two huge companies like Apple and Google. Yeah, um, that's going to affect, QQQ net option sentiment. That being said, um, I still think it's kind of more of like I said, a swing trade around that, and like, the assumption that, you know it's going to affect tech as a whole, as opposed to, just isolated areas of tech.
Mm-hmm. And so the Fed getting into Jerome Powell's decision, staying put. Do you agree with that? Do you think they should have cut, raised? Would it be a real outlier if you were to think that? And then also, they highlighted a lot of stagflationary concerns. How do you think the market will digest hearing that from the Fed over the rest of the week?
Yeah, I mean, it's definitely a stagflation thing, and I don't really think that I think you have to do this, right? Because when you're looking at, a fluid situation, even for the people that are very much, 100% whatever this is, whether it's tariffs or it's going to be, deal making is going to work long term. Even those people have to acknowledge that it's difficult to set policy around like an art of the deal policy, right? Because the fact of the matter is, if the policy is we're going to get negotiating leverage. We might take it left, we might take it right, but we're going to like kind of apply the leverage in whatever looks good. You don't really know if you're going to be dealing with inflation or if you're going to be dealing with job loss or, if the markets will need to be supported. So I think that that's why it's just like when you're dealing with a fluid situation as the Fed, and not even, they're always dealing with fluid situations to a certain extent, but the difference between the normal fluid situations is they have a lot less control of this economy than they typically do, and they can pull all the levers they want, but they can't change like the art of the deal kind of mechanics. And it's a lot quicker, right? The Fed is not set up to respond in real time. Like, yeah, there's some emergency cuts, but especially considering the fact that some of these things that hurt the market also risk inflation, it's not really that simple to react in real time.
So I think some Trump comments that happened yesterday was that he said he has earth-shattering news coming soon. I think that sent like Bitcoin and some of the growth stuff higher last night. And then today, Trump said he's not open to pulling back 145% tariffs, but also it was announced that China and the USA will begin trade talks Saturday in Switzerland. So, I mean, so many mixed signals coming our way. What is the truth? What's a lie? What's going on, George? Help us sift through all this news.
I don't remember if it was like the Monday stream or if I said this last week. Um, But my official advice on this stuff is like, don't don't try to analyze the words, right? If we're like, it's the same thing as we were talking about with Powell, I think is good advice here. Like, the art of the deal strategy, means anything can shift. You don't know if something's being said because it's meant, or you don't know if something's been being said because it's gamesmanship. And if you genuinely cannot know the difference between those two things, you cannot genuinely know how to interpret the events. So, it's what we've been doing. You have to be strong with your hedging, or if you don't hedge, at least with it, like something like an inverse ETF, um, then you need to be prepared to go more to cash whenever you're kind of seeing concerning signs, like when we see net option sentiment. I mean, I'd watch SPY a little more before I'd be like, okay, like it's really time to start aggressively hedging or going to cash. SPY net option sentiment. Um, but yeah, I think that we're absolutely dealing with a situation here that is incredibly unpredictable, incredibly volatile, and the best things you can do is kind of prepare yourself for an up and down scenario. And unfortunately, watch the markets closely, watch signals closely. Like, that's something that I don't always say, because a lot of the markets you can look at longer time frames. But there's some parallels here. The same problem that the Fed is facing in not moving one way or the other is the same problem that is keeping me in this advice. It's just like so much can change day to day. How do you really lock in a plan that's meant for the long term? I don't think you can.
Okay, so circling back to the Apple and Google story. So Apple is exploring adding AI search to its browsers, and Eddie Q, who's Apple's services chief, said he believes that AI search engines will eventually replace standard search engines such as Google. And Google was already one of the lower valued big tech stocks, but that sent it even lower today, 8% down. So two questions. Well, your thoughts about Eddie Q's claim that AI is going to replace Google search, but then also, is Google a value trap as it currently stands? Because it looks cheap, but it just hasn't been able to perform. And then I'll follow up after, but let's dive into that first.
Is Google a value? I mean, I don't know. I think right now Google um, is it's tough, right? Because Google's being priced like it has major problems. Um, and I don't think it has major problems. It might have major problems, when you look at, especially when you look at some of these legal stuffs and the threats from Gen AI. Like when you're looking at these, like comments around this, I think a lot of people are also kind of saying in conjunction to this, like what a threat Gen AI could be to search. So it's not it's odd, right? Because you look at the history of Google, and there's never really been a real threat to them. And you could look at that as like, oh, there's never been a real threat. They're going to continue, on forever. But the truth is, there's been a lot of businesses that had, strangleholds for a while. We always kind of talk about it on this, and it's not like Walmart is dead. But Walmart didn't even bother to start competing with Amazon like online until Amazon was like pretty old. Um, and that's just kind of how it goes sometimes. Like I don't necessarily think, I look at Google kind of similarly. Like there's some people, especially like older people, that no matter how good the generative AI stuff is, um, they're just comfortable with Google, and they're comfortable with Google searches. And, maybe something a little like, more similar to, a Google interface that leveraged Gen AI could be something that, got them over, because there's like lower switching costs. But, kind of the elephant in the room, I think, with all of this generative AI stuff is, kind of next gen interfaces. And if I think about like, does Google have a major problem? Like that's where I would see it having a major problem, right? I think that the more people start talking, um, to the products. These generative AI systems, or pure generative AI systems, kind of have big advantages in that scenario. And then you say like, okay, well, maybe Google makes the talking generative AI system. And Amazon, by the way, I think we talked about this on Monday, or maybe I was talking about this with someone else. Amazon is rolling out agents that buy things for you. And that is all to say, right? Maybe Google's business model is in trouble in that situation, right? Because even if you say, okay, Gemini is going to be the Gen AI solution, right? Even if you say that, where do they put an ad in you being like, oh, Google, buy me a new, buy a new milk and send it to my house, right? Milk is probably not a good example. You wouldn't want to ship it. I don't know why I picked milk. But anything that you're talking to, it's kind of weird to interject an ad in like a conversation with you and a generative AI. So I think there are, definite existential threats to Google. And I think sometimes when you kind of see these reactions from the market, it's because those threats exist, but everybody's kind of like focusing on them today when there's, other news or legal concerns, they kind of get overemphasized. But it's legit. And I mean, in terms of, I don't know, was it just the question was just about Apple in terms of, but like anyone who's watched the stream for a bit knows how I feel about Apple, and it's a it's a company built on innovation that is not, very innovative anymore. So yeah, that is a major problem. And I just don't see, like, I see them kind of dying, like, the Google thing could be a fast death, right? Because Google's so dependent on search, and it wouldn't be a death, right? They still have like YouTube. YouTube's very popular. So death might be a little extreme, but I like Google as like the search engine giant could lose a lot more ground a lot quicker if someone, disrupts search. But there's so many people that are like on Apple devices, that I think it's like, I think it would absolutely be a slower bleed there. But you never know. Like, same kind of thing. Like, why it would be slower is like if there was a better phone that came out. Like, I don't even know. A lot of Google people say the phones are better, so maybe there's like the other ones are better. So maybe there is already a better phone, and it's not. But if like a phone that people agreed was better came out, or a different system, like we're talking about different tech, maybe people don't use phones anymore, maybe it's something else that kind of has more of like an auditory interface, that gets replaced there, or maybe even we're not necessarily that far away from the possibility of just like a brain interface interaction, that could obviously that could really hurt Apple. But I could also see the Apple being the ones that could innovate on that kind of thing. Theoretically, they haven't shown that they can, but it theoretically could be done. But yeah, I think both of these companies are in trouble for different reasons, and they're kind of also in trouble for the same reasons, right? They were both innovators when they were younger, like really big innovations. And I would say Google, I still viewed as a good innovator more recently, and I still probably view their innovation capacity to be better, but they both have the same problem, is that there are more innovative companies out there than them.
So the Mag 7 stocks, they all have their own stories, but they seem to trade similarly on a daily basis. And, now you have Google just a few percentage points off of its April 2nd or early April lows, but you still have like Microsoft, Meta, Tesla, like 15-20% above. Do you think that gap will narrow and all of these stocks are going to retest their early April lows? Or do you think we're going to be in a time where they can trade a little bit more independently from one another?
I don't know. I think it's all just so dependent on the news cycle, right? I mean, I think we know, right? And it's pretty simple at this point. We know if there's good news or the perception that good news is coming, growth stocks are going to do well. Large cap growth probably the most. But we are starting to see, small cap growth. I would say the more people feel comfortable, the more we kind of see small cap growth catch up to large cap growth. And then it's, the opposite. And in that scenario, you're seeing things like consumer defensive not do as well. Certain kinds of things like real estate, and then the other side, but not as bad as consumer defensive. Consumer defensive is like there, and gold is kind of like the inverse of that. But then if there's bad news or just like too long without good news, then we're seeing we're seeing those growth stocks get really hit hard, right? And we're seeing growth stocks, we're seeing tech stocks, we're seeing finance stocks, that aren't really considered growth stocks, but I would like put them in the same category of things that just, are getting hammered on these worries. And like the market is that simple, but what makes that simplicity hard is that nobody really knows which of those scenarios we're going to be dealing with on any given day.
So let's switch over to Disney, which reported earnings and is still up over 10% today after a double beat. They also they had forecasted that they were going to shrink in Disney Plus subscribers, but they were able to gain over 1 million in the quarter. And then they also announced a plan to build a new Disney theme park in Abu Dhabi on Yas Island, making its first major expansion into the Middle East. So I feel like when we've talked about Disney most of the time prior in this room, it's kind of been like they're in a malaise. They're not able to get their business cooking, not a real competitor for Netflix. Are things starting to change? Are things working for them now? Are they a legitimate competitor? Or is this a one day and short term little pop that they're seeing there and you don't believe the story just yet?
I wonder are like the Disney characters different in the
They
Middle
did
East?
say they did say it was going to be like I don't know if that they actually are, but the way they worded it made it seem like that, like it was going to be like very into the culture and all those type of things. So I would imagine there are
Yeah, because
some
I don't
differences.
think Jasmine and her bear midriff are welcome there. Like I'm trying to think of some other ones. But
Actually,
yeah, I think
to your point, it was interesting. They also said that I think basically like the Abu Dhabi Kingdom or whatever it is basically funding it and building it, and Disney is getting like royalties from it essentially for once it's built. So I think it's a different structure than maybe their American parks are.
I want to see snow. Oh, there's a lot of Disney movies banned for LGBTQ reasons. Beauty and the Beast, Onward, Eternals. I mean, I don't know. Maybe there's West Side Story. This is not what I expected. Lightyear. Yeah, I didn't know. I thought maybe the classics, but yeah, none of those are like the um characters that walk around. I mean, I mean, I don't know. I haven't been to Disney recently, but I feel like the walk around characters are like kind of the classics. Um, but yeah, I could probably like I could get lost reading about banned banned Disney characters in the Middle East. It's a good Google, but I had to pull myself away because it's a sideshow on this one. Um, anyway, I just like I think that that's very I think that that like Disney park could be huge and it's smart to not have to spend the capital. But they're just they're non-competitive on streaming. I still think that was like just a huge miss not to sell their content. Um, because I mean it's valuable. It's like a question of like revenue versus the capital expenditures of like making all of the tech. And I mean I actually do think Disney Plus, the interface is nice relative to some other ones. It's a little buggy. Like Paramount Plus, I feel like is the buggiest one that I've used. I don't know how many corners Paramount Plus was cutting. Um, but they're non-competitive. I mean, and I think where they're especially non-competitive and they really missed the boat on this is like the under 18 crowd is like one of the biggest, Disney crowds. And like when I'm around, kids, anytime around my relatives, like they're not really watching Disney. They're watching like some YouTuber. So I think that, that's where they really misfired, especially on the streaming. And the other thing is like, okay, um even if like kids do, even if kids do really like, Disney movies, I think it's something where it's just like you'll watch it like here or there. Maybe you want to buy it, maybe you want to rent it. Like the catalog just isn't really, I think, deep enough that everybody, that I don't think it's a very good product long term as a result of that.
My sister has three toddlers, and I've seen too much of Miss Rachel. And for anybody watching knows Miss Rachel, she is, oh my gosh, she's on the television for I think a lot of families nowadays. She's making a killing on YouTube, no doubt. Spinning to OpenAI, this was an interesting update in their, trying to become a for-profit business. They actually said that they're going to no longer pursue that, but they didn't really give a clear direction of what kind of structure they're going to be looking to do in the future. But another interesting point, which I had never realized before, this they backed off of it, was that in the deal they've had with Microsoft, where they've raised nearly 14 billion, under the terms of it, OpenAI had 2 years to transform itself into a for-profit business, and if it failed to do so, 6.6 billion of that funding would become debt. So it seems like they actually have like, I don't know if it's a need to become a for-profit business or if they'll be able to manage if they're not able to do that within 2 years. But I didn't know there was a deadline like that or a requirement from Microsoft before this.
I mean, that is a lot of debt. I don't know, like the terms of the debt would be interesting to know. But it's not an insane amount. Like given OpenAI's, like what was their? I think their valuation was. I mean, OpenAI current valuation 300 billion. Yeah, I mean that's not. Yeah, I mean we're basically talking about 2%. 2.2% is debt. That's pretty easy math, actually. So yeah, 2.2% of your value as debt is not, it's not, wonderful, especially for like a growth company that you would think would want to raise equity, but it's not bad either. But it is kind of interesting because I heard at different points, I've heard like about like other teeth in that agreement. Um, and I think at one point they said like, like Microsoft started to like, yeah, I think the most interesting thing was I think if they didn't bring products to market at on certain schedules, that Microsoft would get to have like their most current stuff. Um, and if they did, they could like give them like a generation behind or something like that. Um, but yeah, I think it's super um it's super interesting um to think about what else might be in that deal, right? like these little things are surfacing here and there, like, it would be, I don't know, I was like, if I don't know if like, I mean, someone could probably leak it because any investor that was doing diligence on investing in OpenAI, and there's been a ton, would probably have access to that agreement. So yeah, I'd love to, if you know anyone at any of the companies that invested in it, I would love to see that agreement leak because I'm sure there's a lot of weird, funky stuff in it.
Well, I would think like with if you're going to make a business deal, you'd want to be very aligned and have like mutual benefits, which I guess these two do, but it's almost felt like to me the whole time that like it's been a deal with the devil. Like Microsoft has been trying to get control of it completely in a way, and they're almost not aligned, or Microsoft is putting pressure, and there's all these weird things where it's like I feel like in the end Microsoft just wants to fully control and just absorb OpenAI. Do you think that's kind of the end goal for Microsoft? Because it seems like they're just like putting pressure on all these different points to try and coerce OpenAI into being included, or else it seems to be the threat. I don't know.
Oh yeah, I mean, they definitely want to control it. Without a doubt. That's why I was like, I'd love to see what else is in that contract. If there's like other weird stuff. Like debt is not a big deal, but obviously, what we do know is that there is, kind of coercion in the deal, right? because um, converting to a for-profit is definitely a step in an acquisition. Like I'm not like Microsoft. I don't think Microsoft can own or control. I don't think a for-profit can own or control a nonprofit. I don't know that for sure, but it sounds like something. It sounds like something I've heard before. Or at least seems like it should be right. Like otherwise, like what's the point of the nonprofit? If a for like the whole idea was be that they're that they get to optimize around other goals. Um, but yeah, I definitely think um I definitely think that it's we haven't heard the last of the interesting parts of that contract. And I don't think we've heard the last of that containing other mechanisms uh that Microsoft can control. And I would say almost for sure, um knowing Microsoft very well as long as I have, almost for sure there's certain like longer term profitability, um, like profitability and revenue hurdles that they need to hit. And while um, they might like that nonprofit thing might be a barrier to owning the company and the people, there could be triggers in which Microsoft could just grab the IP, grab the code, and not necessarily have to like compensate OpenAI for that. But yeah, that's why it would be fascinating to see that contract, because Microsoft is certainly investing a lot in this deal. And it is pretty unprecedented for Microsoft. Like Microsoft, very famously, stole Apple's technology, right? They were kind of built on this idea of like, oh, we can build it ourselves. And they frequently do that, and they frequently rip off other things, which is like, it's kind of funny how these things come full circle because like Google totally ripped off their Office products. Um, but yeah, I think that I think it's going to be very interesting to see how this OpenAI Microsoft thing continues to develop.
So I want to get into this study that was done by Northwestern's Kellogg School of Management, which shows that in betting-friendly states, people drop about $1,100 per year online for wagers, and their investments sink by 14%. It's also accompanied by a 1% lower credit score, 8% higher debt collection, and a 28% jump in bankruptcies within 4 years. So my question is, can this continue, or are like the businesses of these gambling companies like DraftKings, FanDuel, and others, like if they're hurting the finances of their customers, can that relationship work? And then also, is this effect of like legalization of betting just happening recently, and this is this like a boom for them, and then we're going to see these things kind of level out into a more reasonable level, or is society just got the gambling culture ingrained?
Well, in fairness, people like I'm pretty sure that uh what am I like that retail investing is on the rise too. So it's not necessarily like they're not investing as much and they're gambling. It seems to be these both forms of gambling. There's an appetite for. But no, I mean it's got the thing about it is, and the same problem exists. Like there was like a really funny. I was having like an online debate with someone about the Shadur Sanders fall in the draft, right? And I promise I'm coming back to this. I was just like talking about it, and like one of the things I was saying is like yeah, I think some people overhyped his talent, but at the same time, like it was also very clear that he fell for reasons beyond talent. And like one of the things that I cited for that was if you look at the offensive player of the year estimates, I believe he was like the fourth or fifth down. But the really important data point was Dylan Gabriel, who was taken, I believe, 2 rounds before Shadur. He wasn't even on the offensive player of the year on the same team, the Browns. So what does that, I mean, what does that say? That's pretty clear evidence that, you know, the general public, like wisdom of crowds, thinks that Shadur Sanders is more talented than the guy that went two above. And there was other reasons he fell. That's all to say, like, this person I was talking to absolutely insisted that I was wrong and Vegas was wrong. And he's like, if you look at the tape with your eyes, you know, I know that he's a garbage player and blah, 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 all this stuff. So I say that because I think the problem of people thinking that they're, you know, better and they understand things more than everybody else is worse in sports, right? I think everybody thinks they're a genius. And I think people generally have spent a lot more time watching sports than they have analyzing companies. So that makes them even more, you know, confident in this situation. And like what I said to this guy was, I was like, look, you know, not only do I predict things for a living, like I am a platinum fantasy football player on Yahoo and a diamond fantasy basketball player on Yahoo. And I was like, I couldn't possibly like look at Vegas odds and be like, well, I know better than this. I just know I watched the film. It's insane. And I think that's what's working in like everybody's overconfident, but because people like log more hours on sports betting, it makes them even more overconfident than they are with stocks and makes them think they're even more of an expert. And that shit is not going away anytime soon. And that's what makes people bet because everybody thinks they're a genius when it comes to sports betting and sports analytics. But, you know, at the end of the day, betting against the house in anything is not a smart thing to do, which is actually, by the way, why I would tell you that that it is smarter to invest or trade than bet. Because in these bets, you're talking about like you're only dealing with a market maker. And they, you know, one of the things why they make so much money is they're putting out all of these odds and they're basically, basically like their ROI on all the people betting across like all of these lines, like when people are betting on the offensive player of the year, right? They're making all of these different bets. And unless someone like a bunch of people really zeroed in on the right person, they're going to make money. That really, really favors them, and your odds are way worse when you do that kind of thing. Whereas in investing, you know, there's no house determining the odds. It's really like a one, you know, there's people on the other side of a trade. It's a 1v1 situation, not a 1v many. Like you're talking about where you have one of the like, you know, 20 choices. So your odds are actually, and you know, people don't hear me say this about investing that often, but your odds are certainly much better in investing than they are in sports betting. But that's the problem, this overconfidence thing. The more someone actually is around a subject matter, the more overconfident they are. And people don't understand those odds and how crazy those odds are against them. And that's why these sports betting companies are, you know, are going bananas. Like, I don't know what like the profit margins of like DraftKings versus like let's do like gross margin profit margin DraftKings. I want to look at they're what? Net gross margin. Okay. No. Well, that makes sense. Wow. Well, I didn't have to look at Goldman Sachs, but I was like, no, I think Wall Street's still a better game. Not calling it this early. DraftKings is like 47% gross margin and Goldman Sachs is 85%. I'm actually surprised. Like, what are those idiots? What are those idiots spending money on? Oh, maybe it's the ad.
Marketing.
I bet it's the ads. Yeah, I bet it's the ads. Yeah, Goldman's like everybody just come to me. I do want to kind of look into those prices more. But that does kind of say like what a good business finance is. Like even though your odds are you don't have quite the same odds. But I guess that's the same thing with casinos, right? Goldman Sachs still does better than casinos do, and the odds on that are I mean, I'd say the sports betting for the house, the odds are probably the best.
So we have one more topic to get into, but let me just thank almost 2,000 people have tuned into the stream. If you've enjoyed the topic so far, give us a like, share the stream with your friends if you enjoy them. But we got to get to one more topic quickly. So I saw this stat, which made me think about two stocks, Carvana and Uber. Uber just reported earnings. Carvana is set to after the bell. But the stat was for used vehicles. They're being sold at higher prices. They've increased 4.9% year over year, and that they're saying is due to people expecting or new car prices increasing even more for to account for tariffs. Do you think if the used car market comes back into vogue, that's going to benefit stocks like Uber, Lyft, Carvana? And then how are you feeling about Carvana specifically? I see they have a 90 net options in Prospero right now, but I mean their stock has been super volatile, and so has their signals in Prospero. So it seems like it could go either way.
Yeah, I think you can kind of look at I mean, I'm not sure about Uber in the same way, but you can kind of look at like used cars as a bit of a consumer defensive thing. And if people are kind of forecasting, less demand for new cars, that absolutely is the case. And then you also might get more churn, right? If people are having financial troubles, they might sell their car, downgrade their car. There might just be, more of a churn there, and it's much easier to do that in kind of a used car situation. Um, but yeah, I really just think um, I mean, I don't know about Uber. Like people always tend to like Uber a lot more than I do. Like that's one of those companies that I just have I have macro problems with them. Like they've got some good businesses, but there's like the existential threat of self-driving cars. There's the fact that they're like their business inherently, like whether it's like Uber Eats or whether it's like their businesses depend on kind of like treating workers in a way that like doesn't value them as employees. I mean, a lot of these votes have passed, but like that can always change. Like imagine if like we actually start to want to like treat people fairly and give them benefits when they're working crazy hours for Uber. So I just look at that business, and it's a business like I never really like, and I don't look at it as the same like defensive way as I look at Carvana, right? Like people in cities are much less like if they're tightening their budget, are much less likely to order Ubers. They'll take public transportation. They're much less likely to order food. They'll cook, right? So I think that like if you're forecasting, financial problems, I think Carvana is a much better bet than Uber.
I was looking at the markets here. I don't know if anybody knows of any news that was just said, but it looks like there was a big pop in QQQ from being in the red to up 0.75%, like pretty quickly. So I don't know if there was an update on anything or whatnot, but that'll sure make the model portfolio update more interesting. Let's see the net option sentiment. Net option sentiment still 35 for SPY, 9 for QQQ.
Wait, it's just like popping.
It looks like it's popping and now dropping a little bit. It's still up 0.5%. I don't know if Powell should
Okay.
be done
I gotta
speaking
make
by
the
now, I
switch.
think. Yes, we'll catch you on the other side in the Prospero Laboratory for the model portfolio update. Everybody stick here with me. George will be right back in the stream, and we'll go through live updates, make switches in the model portfolio. I don't know if George forgot to leave or not. Let me see if I could remove him. Okay. All right. Thank you, everybody, for tuning into the stream today. Let me check and see how we're doing on YouTube for the likes. We're trying to get more likes on the streams these days, trying to see the growth. If you guys all enjoy the streams every Monday at 11 a.m., Wednesday at 3 p.m. Smash that like button. I see we've got 6 here right now, so let's see if we can get up to 10 on the stream, and then on Twitter as well. But yeah, taking a look across the markets, they are all in the green. Although QQQ is now up only 0.25%, so I don't know what happened there. A little bit of volatility to end the trading day. But yes, QQQ, SPY, Dow Jones, Russell, all green across the board. Let's take a look at some of the bigger stocks, see if any of them are moving, to see why we are seeing this little bit of upward momentum. Ooh, was there something with the semis? I see Nvidia's up 2.5%. A lot of the semi stocks are kind of popping. Let me see if I could find any headlines on Twitter. Usually Twitter is the best at getting quick information. Let's see. Trump to All right, so it was posted by Ripster on Twitter. Trump to rescind global chip curbs amid AI restrictions debate. Okay. So there you go. That's news. That's making the market pop a bit. George, I think, is going to be pretty interested by that when he gets back in here before we start the model portfolio update. Looks like Jensen Huang had an impact on him. George, I found the news. So, posted by Ripster on Twitter, it says Trump to rescind global chip curbs amid AI restrictions debate. And it's sending Nvidia higher and a lot of the chip stocks.
It's what is the news?
Trump to rescind global chip curbs amid AI restrictions debate.
Chip curbs?
So maybe the chips are exempt from tariffs, possibly?
I thought they already were. This is so hard. This is so hard to keep track of. That'd be really funny if that was what the market was reacting to, like something that was already in force.
Nvidia was up 3% at one point. Now it's up only 1.5%. So
that would be really funny if everybody reacted and then they were like, "Wait, wait, that was already true." All right, I gotta move.
seeing a slightly higher reading, 41 now for the SPY and 25 for the QQQ.
All right. I'm going to probably need that again in a second. I'll do that at the end, right after I close my positions and do everything, because oh, I'm not sharing my screen, am I?
You are not yet.
Well, it was nothing exciting, everybody. I was just copying some tables. Okay. Any Tim Robinson fans out there? When I said tables, I was just thinking about the Tim Robinson skit. If you're not a Tim Robinson, if you haven't watched, I think you should leave. And you like interesting comedy, I highly recommend it. Okay.
Growth looks to be healthier today, but part of this might be a news reaction. And there seems to be a lot of differing signals around that, so we won't lean into it much. Energy is in kind of an extended red streak here. We will definitely look for bears there. Consumer discretionary continues to slump, but we like our exposure there. On the bull side, industrials look to be by far the strongest, considering today and 1 week.
God, sometimes it doesn't link. I have to be like so judicious about getting this linked properly. I gotta grab like this link specifically. Sometimes I grab the URL and for whatever reason that doesn't work. All right, well, we definitely need, damn it, I forgot to do this. Probably got hit by all those Palantir situations. No, it's still going. What's taking you so long? Okay. Sorry, I gotta go into my Slack. All right. Kind of hamstrung with this. Oh, it just popped. I was waiting for my move. I was waiting for my momentum score. I'm kind of shocked that we don't have any Tim Robinson fans out there.
I'm not gonna lie, I don't even know who Tim Robinson is. He's a comedian, I'm gathering.
Yeah, he was like I think he was like fired as an SNL writer. He's really weird, but hilarious.
Sounds like a good kind of weird though.
Yeah, I mean, some people don't like him. I think my girlfriend wishes he'd disappear. I think he thinks he's okay, but I like him way too much. Oh yeah, Qualcomm not a good stock to be owning. Why did I do this twice?
Bob Safford's asking about AppLovin with earnings on deck.
Asking about AppLovin not. No one.
In Prospero, 95 upside, 0 downside, 97 net options.
Ugh. I'm gonna watch it. I'm gonna watch it after and see if I want to add. That's what I'm gonna do. I got burned a little too much with Palantir, and I'm gun shy. But I mean, my instinct is I think it's more probable that it's good than bad. But like I said, I got burned. I'm not gonna. Not going back to the earnings well too soon. I can decide if it's more efficient to. Damn it. Where did we level out on this? About the same. I gotta see. 38. 32 short. Okay. That's about where we want to be to start. So. Yeah, look at these. I don't love any of these industrials. Well, let's see, mine looks a little better. Well, let's grab both of these. We got a little mid cap there. Oops. Oh. 67. This. Okay. Anything else? Energy. Maybe we'll go. We'll go all three of these. And then we'll go along this. A little hedge situation. Oh, no, it is ML. Given the sitch. IT. No, I'm not that confident. That's kind of good. I like that for a mid cap. All right, anything else? Nice to get both sides of that. Oh, actually, I prefer that. Unless we have another healthcare. Yeah. Okay. Honda. I feel good about getting Honda. Oh God, we're behind. Okay. That's all, folks. Where is SPY and QQQ net option sentiment at, Steven?
SPY finishes at 38, QQQ 13.
Okay, that's done. Okay, doing that. Getting this out. Only a little late. And then we have to take a look at Paramount, really. Snuck up on me. Palantir, like coming back to respectability, too. Yeah, Palantir, ASP. All right, that looks good. I bet I'm behind on some of these shorts. Ooh, wow, WTW. Oh, that's great. The winner. I added one yesterday that I still haven't put in. What did I add? What was it? I'm just gonna look. Yes. HRB. Okay, that's fine. All right. Any questions? Oh, I answered the App 11 one. I'm actually going to take a look at what's going on there right now.
Nothing as of right now. Got it open. I mean, it's up 1/3%. Looks like it's just waiting.
With bated breath. All right.
All right.
Thanks for coming, everyone.
Yep. Thank you, guys. We'll be back Monday, 11 a.m. See you all then. Thanks, George. Bye, everybody. Have a great weekend.